ready, preparation for the purchase of a home. And of course, preparing your credit, that's what started this conversation, is very important. Having your credit in line, knowing what it is, knowing the little steps you can take to improve it. And one of the things Carolyn hadn't gotten to mention, but I know she was going to, so I want to throw it out there, is do not get new debt after you've qualified, but before you've closed. I can't tell you how many closings I've gone to where somebody was so excited to get their new house that the day before they went out and bought a new car, or they went to Aaron Rents to rent all the furniture for the new house, or any of those things that do affect your credit. If you do it before you close, it's going to interfere with your closing because you will have changed your credit picture and the lender will need to re-review it. So that's my number one from a closing agent standpoint, where I get to be the bearer of bad news. When they say they bought a new car last night, I say, oops, we need to call your lender and put the closing on hold.
Right.
And you do like an update, don't you? Like 48 hours ahead, you call the employer to make sure they're still employed.
Right.
You check a credit again, so people don't realize that you're going to have an update on their credit and their employment. So for just, 48 hours before closing?
Not necessarily. It could actually be right at closing. It could even be right after. And that was a great thing, John, because that's one of the tips that we wanted to give out as far as the whole financing, all the tips that we're giving out is a lot of people, when we do a loan application, we're pulling your credit, we're verifying employment, you're getting us pay stubs, you're getting us bank statements, and we give you your official approval letter, you get the appraisal, everything's great, and you're excited and you're celebrating and you want to go shopping.
Yes.
And you think you're done because we did put you through a lot and you are officially approved. However, just like John said, don't do anything until you are in the home with the keys, because we are always going to cross-check at all the way up until the end.
Wow. That's right. And people don't think of that.
Okay. Well, that was all after we're giving people warning what not to do before closing. So let's backpedal again and go to what can people do to prepare. Okay. I'm out there shopping, or I'm not shopping yet. I'm doing the proverbial online shopping. I'm looking at waterviewre.com, where we can look at the MLS.
Oh, that's right. Waterviewrealty.com.
It's waterviewre.com. and you're looking for properties. You're just kind of browsing right now, but you're narrowing it down and you're getting ready to buy a home. So some more tips on preparing our financing so that we're ready. Oh, there's the home. Let's make a call. Uh-oh, can we get a loan?
Right. Okay. That's great, John. The other thing I wanted to touch base on is, as far as there's a lot of people out there who want to shop for a home, would love to get a home, but maybe they don't think they're ready because there might be something there might have been a bump in the road down earlier in their past. So one of the things too that people might not realize is John also is an attorney at Lack & Lack Charter. You can sometimes, if they're not sure that maybe they had a bump, foreclosure, divorce, or something that they think might be precluding them, they can talk to John, get some advice on whether that's going to be an issue or how to fix that issue. So that would be something good, about 12 months or so, or, there's a lot of people out there that aren't even sure if they can even qualify.
Well, that's great. I appreciate that, and that's exactly right. We Lack & Lack Chartered, which can be reached at area code 321-953-5115. We're on the web at lacklaw.com. That's LACKLAW.com. Be happy to discuss with you pre-purchase considerations and help you determine whether that judgment, whether that lien, whether the pending divorce, any of those things might adversely affect your ability to purchase, or not adversely affect it, but how we can find a solution to make sure that you are able to purchase the home.
Yeah, and a lot of people come back very happy realizing that they can actually get something when they never thought they could.
That's right, because a lot of people think, I've been foreclosed on or something like that, and I'm out of the market forever.
Right.
And they don't realize that you do have things, didn't you say, foreclosures within 2 days?
Yeah, sometimes you can do 1 day out. So it all just kind of depends on, again, the tailoring of that specific borrower.
Exactly. There's so much more into this than a typical, here's the one size fits all. There are it's all dependent upon the property, their credit, and of course the ways of borrowing, and their ways of paying back the mortgage that that is one of
the ability to repay.
Yeah, exactly.
Ability
ATR.
ATR is one of those new. We didn't have a chance to touch on it, and I don't know if now's a good time. But the CFPB, the Consumer Finance Protection Bureau, is the new organization, federal. Organization's the wrong word, but supervisor of our lending world. And they passed a whole bunch of new regulations last year. And one of the big ones, although I guess ability to repay has been there for a little bit, but that's included in is this ability to repay. Lenders cannot and will not lend you money unless you can prove, documented proof that you have the ability to repay the debt.
Right.
So it doesn't matter how good your credit is. It doesn't matter. I mean, if you got good income, then you have the ability to repay. But in the old days, and I've been doing this for almost 30 years now, in the old days, lenders could lend on your equity. So if you had a $100,000 house, you could get $50,000 from anybody for anything, and it didn't matter whether you could pay it back because the lender was like, he doesn't pay it back. I foreclose. I take the property. I get my money back. All is well, and maybe even profit. That's the new laws came out to prevent lenders from taking advantage of people in distress who couldn't afford the home. Again, I won't get into the political aspects of whether I like or dislike the rules. They are what they are. And the rules say that the borrower must prove their ability to repay the debt in order for a lender to make the loan. So,
well, and that we used to call those no qualifying loans,
right?
Because you really on your signature loan, basically. Well, the one thing that a lot of people also don't understand, and you'd think a lot of this would just be information that people would garner from reading the paper or something else, but there's a lot of people that just don't understand that if let's just say you closed on the loan and you lost your job the month before, they can't call your loan because it's already done. So you're not going to give up your loan because your situations change after you close, but you just want to make sure you have all the information up front, your ability to pay and so forth. But a lot of people think I'm going to be instantly foreclosed on if I lose my job. As long as you can still make the payments, that's not an issue.
Right. Well, I do want to throw over at Carolyn. We discussed ability to repay.
Correct.
But it doesn't mean, okay, I work at IBM and I make my $100,000 a year and here's my pay stubs. Okay, that's easy. That's an easy ability to repay. What about those who are self-employed or maybe retired? Are there other ways to document that ability to repay for those listening who are thinking, oh, my goodness, I'm self-employed. How am I going to prove I make the money?
Right. Exactly, John. And that's, again, that tailoring analogy that everybody is different. For self-employed borrowers or people that are on commission, we have different options. We'll, of course, look at tax returns. We can look at bank statements, and we'll analyze the bank statements and look to see how many deposits they have on a regular, ongoing basis. We'll also look at assets, bank liquid assets and checking and savings, even stocks and mutual funds to make sure that they have sufficient reserves or enough where they could conceivably make the payments with their assets. So there are all different types of alternatives aside from just a straight pay stub. Like
well, what about
saying.
those who are retired? And so now they're left with, hopefully they have a pension or maybe a 401k, or maybe they're just living on Social Security. Does that preclude them from buying a home?
Absolutely not. And another point on that is a lot of people feel that they might not be able to get a 30-year mortgage depending on how old they are, but we do not discriminate on age. Whether you're 18 or 89, you can get a 30-year mortgage.
A quick story. I remember closing a loan for a 92-year-old woman. This is 20 years ago. I should check to see if she's still alive, but I guess we know she's probably not. But it was a 30-year loan for a 92-year-old woman. So, it's not. They don't look at ability to live for the length of the loan, just the ability to repay it at the time you close.
Exactly. And so pensions, Social Security, even some people, obviously when we're retired, because as we're earning income, we're saving up for pensions and retirements and putting into 401ks. When you do what's called a systematic withdrawal out of your retirement funds that you have saved up, that can count as income for retired people. And they don't realize that they can do that. But Social Security we can use, any kind of pension and asset.
All right. So for our folks who are retired or retiring, that does not preclude you from buying a home. For those who are self-employed and who can't show this W-2 type income, that doesn't preclude you from buying a home. There's so many again, it's the American dream. Anybody can buy a home,
Right.
or at least that's what we shoot for. And using somebody like Carolyn Wolf to help you find that money you need, and somebody like Jean with Waterview Realty to find that perfect home, we can make that American dream a reality.
Right.
Well, I know when I first moved here back in the early 80s, the interest rates were 17.5%. And what you could buy for 17.5% interest rate, and now at 2, 3, 4%,
Right.
which is the kind of the
Big
going
difference.
right now, big difference. And unfortunately, back then, if you it was going up and down monthly, and it would go from 17 down to 10 and back up to 15. And by the time you closed on your home, it could be totally different than what you originally started with. And we'd have to write percentages into the contracts. So if it went over a certain percent, the person could opt out of the contract because it was so volatile. And unfortunately, when I bought my first home here in the Space Coast, the interest rates were down to 10, and I had a house built. Had a house built. By the time the house was finished, it was back up to 17, and unfortunately, I qualified for 17. So my payment was pretty close to being double.
Right.
So it's always important now to realize what we have out there, not take it for granted, I guess is what I'm trying to say in a long-about way. So one of the last things that you have on here is your asset depletion loans, where income is not that good, but they have a lot of liquid assets. You want to talk a little bit about that? We did touch on that a little bit.
Yeah, and that falls under the ability to repay, but it's a great program. What we do is we do a calculation based on an actual asset that they have, and depending on their age, if they're below the retirement age, so under 59 and a half, we're going to look at liquid assets, not IRAs, but we're going to do a mathematical calculation based on their life expectancy and figure out an exact income that we can use based on that asset instead of a regular pension or salary type employment.
We have so many things to cover. Right now, Carolyn, give out your information again, how they can contact you.
Carolyn Wolf, and my phone number is 321-795-9103, or my email at carolyn@floridalendingpro.com. And I did just want to point out as well, is one of the great things that we do, and people don't realize that maybe they don't want to bother us or get started right away, but we would love to help talk to people so that we can figure out exactly what they can qualify for and if they can, without them being ready to buy.
Exactly, because sometimes they have to set up their whole portfolio,
right,
and get started, which we're going to talk about. You have to come back. Will you come back next week?
Absolutely, I would love to.
Because we want to talk about the 5 ways you didn't know you could save for a down payment, because a lot of times people wait until they're ready to buy, and they kind of shoot themselves in the foot because they didn't do some things prior to that. So we're going to talk about that. We only have about another minute left, but I do want to quickly cover it, and we'll go into it a little bit more next week. There's a lot of different ways to find out if you qualify for a loan. One is you start with your person's income, and then you kind of back into it. Okay, this is how much you make, and what is kind of the rule of thumb as far as the percentages for your standard qualifying?
What I tell people, if they wanted to do it at home at their own convenience, is take 45% of their actual monthly salary.
And
with
that's
that
gross.
figure, gross, exactly, before tax. So 45%.
People don't remember, gross and net are different. Isn't
Right. Gross is before everybody gets a piece of it. And then from there, you minus out your other expenses like car loans, credit cards, student loans, anything you've co-signed. But you don't minus out utilities, because some people do think you would minus out utilities and cable, but you would not minus that out. Whatever's left there would be your approvable amount for a mortgage.
We're going to go into more detail on that next week, so stay tuned. You can also go to our archives and check out other shows that Carolyn's been on that we've touched on this before. I really appreciate you coming to the studios again today, Carolyn. And
Thank you,
Jonathan,
Jean.
It's always a pleasure co-hosting with you. If you have more questions or you want to know a little bit more about what we've been talking about, we do have a website for the show called yourhometownsolutions.com. There you can get the information, how to get in touch with Carolyn and Jonathan and myself, and that will give you a good head start. Or you can also touch base with us by ordering our Extra Equity magazine at no charge that goes into all kinds of how to qualify for a mortgage, how to move, everything. So it's been my pleasure to be with my favorite co-host, Jonathan Lack, and favorite guest, Carolyn Wolf. Thank you for joining us. Thank you for being in the studios. And we'll see you next week on your Hometown Solutions.